JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 16th of March 2021. So yep, welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com. And click on the research tab right there on the top. So now then, jumping into the charts, the first one I want to pick up here is the German index DAX. So this morning I said to you that we will have a nice opening kind of area here around the 14,520 zone, but yeah, it continued to push higher. But as I said to you as well, that if you want to go for some higher levels, well, at least wait for a pop above that 14,595 territory, which is the current all-time high, and currently the index is getting very close to that area again. So just it's just away from that, hitting that area by just a few points. If can we see a pop above this? Yes, of course we can. But the only thing here, what will be interesting for me specifically, will be that can we, if we get a pop above this area, can we remain above that area? Can we close above this hurdle? Well, that's going to be an interesting one to watch, because what we could see here is a pop higher, but maybe a creation of a false breakout, and yep, if the index, of course, drifts back below this 14,595 territory. If so, then, of course, we're not excluding a possibility of seeing maybe a reversal back down here, and just basically a nice confirmation of a double top pattern. But if the index does stay above this 14,595 zone, then yes, of course, we'll continue targeting the upside, maybe even that psychological 15,000 mark. But again, too early to talk about that. First, we need that confirmation break above this area, above this 14,595 zone, and like I said, to get a little bit more excited with further upside, we need that daily candle to stay above it. Now, in terms of Dow Jones Industrial Average, so this one is quite interesting. So the index is open already. It did open slightly in the positive territory. Let me just double check very quickly. Did we confirm a new all-time high? So yesterday, the index hit a new all-time high near the 32,973 mark, and it just fell shy by a few points from reaching that psychological 33,000 mark. Today the index, when it opened, it didn't reach the yesterday's high, the all-time high. Instead, as you can see, that we're now seeing a bit of a retracement here to the downside. Well, to be honest, all looking quite healthy, because we did have a decent up move recently. So from starting from this 31,000 mark here, after rebounding from this upside support line. So long story short, for now, guys, what we're gonna do here is, yes, you can see that the index is drifting lower, but I'll keep an eye on this little hurdle right here, the 32,793 zone, which is marked by the high of the 12th of March. So if we get a drop below this, Yep, this would place the index below the high of the 12th of March, which is Friday's high, which was last week's high, below yesterday's opening price here, and yep, we could see maybe a bit of a corrective move here to the downside. However, again, too early. I wouldn't say maybe actually too early, but just for now, we should remain careful. If we get a pop above this 32,973, well, then of course the next target automatically is the psychological 33,000 mark, or even higher levels. But again, let's see how this is going to play out. For now, still kind of leaning a little bit more towards the upside, but again, as I said, I need that push above that 32,973 mark. DXY very quickly on this. So the dollar index is still struggling with this hurdle, this 91.96 territory. I spoke about this level this morning, and basically the same analysis remains in play. If we want to go for some higher levels, well, at least a push above the 91.96 territory is required, not to mention already a push above this 92.50 zone. But again, let's wait and see. For now, you can see that yes, the barrier here is providing decent resistance. If we get a pop above this, then yes, we'll go for probably for some higher levels. But if we don't, and we see instead, we see a drop below all of these EMAs here, together with the 91.05 level, then yes, lower levels could be met. Now jumping into gold, still trading below that 1740 zone. So yep, in a way, I mean, the same analysis remains here. We are still waiting for, but waiting to see what's going to happen here with this hurdle. So far, the 1740 zone is acting as a good area of resistance. And if we do see maybe a pop above the 1740, still there is a chance for the bears to step in near this downside line taken from the high of the 6th of January, and then yep, another slide here could be possible. But for now, I'm keeping an eye on this 1740 level instead. Jumping into WTI oil, so drifting lower and yep, quietly moving back to this key support zone that I spoke about previously, and that's 63.79 zone, so marked by the high of the 25th of February. So if we get a drop and we get the daily candle staying below this area, this of course increases the chances for a further corrective move lower here. Initially we'll aim for that 21-day EMA, which as you can see continues to act as a fantastic area of support. But if this time it fails to do that, then yes, this could open the door towards lower areas. So keep that in mind. For now, let's say instead, in case this commodity, let's say, rebounds from this 63.79 territory and makes its way back above this 66.60 zone, somewhere around here, this is where we could start looking at some higher levels again. Because don't get me wrong, I mean, we are still trading on above this upside line, but yep, I mean, given the fact that we had already quite a decent up move here without any decent correction, so maybe at some point this move lower here, maybe at some point we will see that little correction. However, for now we're not really getting any kind of, let's say, clear signal for that. For me, the first signal will be to see a drop in the daily candle to stay below the 63.79 zone, and then the second one, maybe a nice good drift below the 21-day EMA. Of course, we'll have these upside lines to overcome, but we'll get to those if we do see that move. For the upside, as I said, we need to see a push above the 66.60 territory, somewhere around here. Another thing to mention, of course, is to keep an eye on, in the short run here, keep your eyes on this potential little triangle pattern, this descending triangle pattern, which of course, according to all the TA rules, tends to break to the downside. And yeah, this area here, the 63.79, is exactly the lower side of that little triangle. But again, will that be confirmed? Let's wait and see. Let's wait for that break first. Ethereum is drifting to the downside, or should I say was drifting to the downside. But as you can see, the crypto kind of rebounded from this 21-day EMA. This 21-day EMA continues to provide decent support, and this is what I said to you recently, that if this 21-day EMA does the trick here again, then yep, another reversal here back to the upside could be possible. However, if we see a drop below the 21-day EMA and then a drop below the 1666 territory right here, now this is where it could become very interesting for more sellers, so keep that in mind. USDCH chef, so something that I mentioned recently as well, that I've talked about this 0.9296 territory, and as you can see, why, I mean, so far it continues to provide resistance. That's the highest point of September of last year. Although last week we saw an overshoot here, but you can see this week and on Thursday and Friday, the pair kind of continues to respect these hurdles. And today we're seeing a slide here to the downside. So in a way, we could see a continuation move lower here. But of course, let's not forget we're still trading above this upside support line drawn from the low of the 16th of February. And yep, I mean, as long as it stays intact, as long as this upside line stays intact, then yes, there is still a chance for the bulls to step in and drive this one lower. But from the very, very short term perspective, there is a possibility to see a test of this upside line, and then we'll take it from there. Gpp Cad, something that I've mentioned to you this morning, and basically what I said to you guys, that if we see a drop below this 200-day EMA, then yes, further declines are possible. However, if by any chance the pair gets back above this 200-day EMA, now this is where it could become very interesting, because maybe we'll see a bit of a retracement here back to the upside, and maybe again a test of this downside line could be possible. However, the day's not finished yet, so yes, we are seeing the pair moving back above the 200-day EMA, but let's see where this daily candle is going to end up being today. If it stays below this 200-day EMA, then we'll continue targeting the downside. But if it'll remain above this 200-day EMA, then maybe a bit of a corrective move here to the upside could be possible. EURUSD, so reacting to the fact that the pound got stronger just in an hour or so, in the last hour or so, you can see we had a strong push today to the upside. We managed to clear this 0.8596 territory, or let's round it up towards that 0.86 territory. We've managed to clear that initially. We pushed higher, tested the 21-day EMA, and look at this beautiful reversal back down, basically. So similar story what we had here back on the 26th of February. Again, the day's not finished. Will we have the same story? Well, we'll just have to wait and see. But again, the same idea remains, as I've mentioned before, that in order to go for some higher levels, I need that daily candle to remain above that 0.8596 territory, or even better, the 0.86 territory, before, let's say, aiming for some upside. But as you can see, there's a bit of weakness right now. So, yep, we'll be very careful with that, guys. And if we do see this one pushing back above this area, then all good for the bulls, or should I say could be all good for the bulls. But if it stays below this, then well, we could be back to the downside. We could be back to examining the downside scenario. And finally, EURUSD. So the pair is still stuck at the same place where we've picked, where we left it this morning. This 1.1910 zone. That's what I'm still keeping an eye on. But again, it seems that so far this area is providing decent support. But if that gets broken, then of course lower levels could be met. You could also see on the 4-hour chart here that we are forming a bit of a descending triangle pattern here. Look at this one, just bear with me one moment. There we go. So, and of course, according to all the TA rules, such patterns tend to break to the downside. But again, until we get that confirmation, we cannot really, let's say, get comfortable with that idea. If we do see this one dropping below the lower side of this little triangle, then yes, further declines are possible. But if we don't, instead we climb back and break this downside line, then yep, we could maybe look at some higher levels, but as I said to you previously, that preferably for me, I would like to see a push above this 1.1990 territory first, at least above that, in order to go for some higher levels, but preferably, of course, push above the 1.2023 zone could do the trick for more buyers. So guys, that's a quick, this was a quick session, just a quick overview of some of the instruments that I looked at this morning, some new ones. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, your likes, and your views, guys. So really do. If you want to catch my video tomorrow morning, as always, my Traders Espresso, as always, 7 o'clock GMT time. For now, have a wonderful evening. Stay safe, and I'll see you later. Thank you very much, and bye-bye.